started the year at 7,140, but because of the COVID cases that we saw, nakita natin bumagsak yung market. Medyo nagkaroon ng tinatawag natin na risk-off sentiment. On a year-to-date basis, we're down by 6.6%. And just to contextualize that, comparing ourselves with neighboring countries or regional markets, we can see that the Philippine market is still clearly the laggard here. So let's hope that we'll be able to play catch up as we move along the balance of 2021.
Ultimately, the market's direction depends on a medical solution, not only in economic, monetary, and fiscal policies.
They're expecting that there will be a recovery as you increase the number of vaccines that are being administered. So therefore, confidence will start to go back.
Valuations alone will not make these foreign funds buy. Okay, even if you say we're cheap or 50% discounted now, whatever, for certain companies, they will not buy. There has to be hope. There has to be certainty that there will be more growth, above forecast growth, above trend growth moving forward because we're coming from a low base. And other than controlling the number of infections, you need that mass vaccination program to, really speed up. And that's what I think moved the market.
Is this the time to look for safety? I think that was last year. This might be the time to start looking for growth. We still think we're on track towards 8,300. We had hoped to see it this year. But I think it's, because of the, I'd say the stumbling block that we hit, which is the additional quarantine period we did not foresee, in February and March, up to April even. We're pushing back that 8,300 target to maybe this time next year. And I don't think there's any reason we should be trading below 7,000 today, considering, the situation that there's at. The earnings that we saw, the macro numbers that we saw, very much support the market being at what we feel is fair value around 7,400 today.
The S&P has kept its BBB rating on the long-term ratings of the Philippines with a stable outlook. So that's actually quite positive. That says that the S&P actually expects the country's prospects for an economic recovery to be quite positive, and then it will probably improve from here on out.
With more economic activity, the less pressure the SP would have to keep rates low. Though I'm not saying that they would hike rates, but as the market's always ahead of it, that expectation by itself can cause some pressure for interest rates to go higher in the second half. Higher interest rates would mean lower prices.
If you have a long-term outlook, then banks right now are a good investment. Banking sector is one of the sectors that you have to pay in. Kasi if right now loan growth might be weak, but if the economy recovers, then therefore industries will have to expand. And one of the key things is funding. So those industries will have to go to the banks to borrow.
If you think the economy can start reopening gradually and will be in a way better place 12 months from now than where we are now, then like what Phil said, you want to buy reopening plays. And conglomerates, most of them provide a very good snapshot of the reopening sectors in this country.
First of all, you have to determine your risk appetite. Okay? If you're really, basically, what is your goal? Are you looking at maximum return? Or are you just looking at, a small return, but your capital is protected? I think that's the first thing that you have to determine.
So if they're happy with steadier and less volatility returns, then money market funds would be perfect for them. Or if they just want to start first, try it out first, that's better. But if they're more long-term, then bond funds definitely will still have a place in their portfolio.
If you have a choice between a money market fund and a bond fund, go for the money market. For now, at least it's a good way of parking your money. And if you can actually hold on to your investment, you may want to consider buying corporate bonds.
You need to look at fixed income to make it part of your portfolio. It's not all for timing, and it's not all just to park your money. It can actually give you alpha. In 2018, it certainly outperformed Philippine equities. And not only that, it gave you double-digit return.
While everyone is afraid, while there is still fear, that's the point where you should be buying. And that's the point where 12, 24, 36 months from now, you're going to make a lot of money. And that time is now, not like when everything's all clear.
I guess the path to recovery, our path to recovery in particular, is not a question of if, but more of when. If there's anything that we can learn about investing, and it never fails to remind us yung pag-i-invest. It is that markets always move ahead of actual developments or fundamentals, as they say. And so it is very important that we always stick to our strategies and position ourselves ahead of the markets instead of being reactive.